What is going on, apes? The squeeze may be getting closer than we all think. We have to go over this very important new news that we did get about 7 hours ago today. And if you don't know about this, you'll definitely want to stay through the whole video. I will be breaking down exactly what this does mean and why this does signify we may be getting close to the short squeeze and actually forced recalls of all of these shorts that have been sold short, and especially AMC, but this does apply to the broad range of other meme stocks. So I don't want to waste any time getting into this information. The only thing that I do ask is that you tap, tickle, touch, or smash the like button, as well as comment down below and subscribe to the channel for the YouTube algorithm so we can push this video out to as many people as possible. Now, getting right into it, guys, this article says banks risk losing cash cow with 970 billion EU bond sale ban. Now, this is very important for the implications of AMC, and I'm going to give you guys the brief rundown of what is going on, and then we're going to get into actually what is syndicated bond sales, because this is much the same as what happened during 2008, and then we had the Great Recession. So getting right into it today, guys, it says for 10 of the world's biggest banks, past transgressions in the European Union look to set to cost them millions of dollars in fees. Firms including JP Morgan Chase & Co., Citigroup Inc., Bank of America Corp., and Barclays PLC have been frozen out of syndicating bond sales for the European Commission's roughly 800 billion euro, 970 billion US dollars next generation EU program, which is expected to issue 80 billion euros of debt this year. The banks have been temporarily barred from the lucrative trades as the bloc assesses whether they have done enough to fix previous breaches of antitrust rules. The move has the potential to reshape debt league tables for the region, hand hefty fees to smaller competitors, and even weigh on bankers' bonuses. Ooh, weigh on bankers' bonuses. That's such a bad thing. Tuesday's 20 billion euro issuance by the bloc may have generated more than 20 million in fees, according to the estimates by Bloomberg. Syndications are a, in quotes, cash cow, said Liam O'Donnell, head of nominal rates at Aberdeen Standard Investments. It currently would have been profitable environment recently with multiple syndications. Now, we are going to take a look at this chart going over exactly how much money these banks do get from these bond syndications, and go over exactly what a bond syndication is and why this could signify that we are actually getting close to the forced recall with the shorts that are currently in AMC. Now, taking a look at this chart, guys, JP Morgan alone receives almost 60 billion euros. So if you convert that into US dollars, that's what, 75-80 billion US dollars that they receive per year. And this says lost business. EU bond issuance is an important business for banks, and that is really who is behind this whole liquidity crisis, is what I'm going to call it, between shorts trying to stay in their positions and having to put more money up. It's the banks that are behind it, and keep in mind JP Morgan is the biggest beneficiary here, and they are behind a lot of over leveraging that does happen at these institutions and hedge funds that are short in AMC. Now, just take a step back to when the Archegos thing happened. JP Morgan was the bank that lost about $1 billion during that whole ordeal. And then they come on to say Morgan Stanley should have never been in a position to sustain such a loss. Gorman admitted, but the firm said they had taken some lessons from the event. They obviously have not. Letting shorts go haywire with AMC stock, knowing that the apes are going to squeeze them out of their positions, and they know the details of this, right? They know that the float is basically owned by retail investors. They know everything we know, probably weeks or months before we do know this. So this is really turning around to be a liquidity crisis. But taking a look at these, all these banks that probably have a hand in a lot of these institutions and hedge funds as well, they get a lot of money from this. So the point with this is, once you take away that huge liquidity, they're going to be more in a rush to have these shorts actually cover their positions to mitigate their own losses, because they're not going to take the blow like they did for Archegos. They're going to let the hedge funds and institutions take that loss while they get their money back at the very least. Now, it says these banks have to demonstrate and to prove that they have taken all the necessary remedial actions that have been that have been demanded by the commission when deciding about these cases. Budget Commissioner Johan Hahn told reporters Tuesday, "We now expect the submission of the necessary information and then of course have to analyze and assess it. I cannot predict how long it takes." So basically they are saying what happens with a bond, right? You get this money in debt, you pay the interest rate, right? That's what happens with bonds. That's what happens with investing. When these companies, when these banks are taking on all this money, they're paying the interest for this. Basically the European Union, the countries that make up the EU, they want to make sure that the balance sheet is sufficient enough, they're not taking on too much risk, that they could not essentially not repay their debt and potentially crash the whole financial system. So that is what they're doing. They're analyzing their balance sheets to figure out how many risky assets they do hold, because with this whole thing, it does go on to say that they have been violating antitrust laws, which is basically lying about their positions and their risk tolerance in certain assets. A lot of that does have to do with AMC, GameStop, and all of these other short squeeze candidates. Now, getting into exactly what is a syndicated bond, just so you guys are very clear. In syndicated bond offerings, a government debt office will appoint a panel of underwriters, banks, and broker dealers. They're called syndicated transaction because the banks will form a debt syndicate, a group of underwriters, usually investment banks, who will manage the debt offering. So that is essentially what this is. It's a lot of underwriting of this debt. That is what the actual syndicated bond is. But why are syndicated offerings popular? Syndications make it easy for companies to pool their resources and share risks. That is why they are keeping these banks out. There's actually about 40, but 10 of the top banks around the world, they're keeping them out to make sure they don't have too much exposure to a lot of these risky assets, like all of these meme stocks per se that are rallying, especially AMC. So some of you guys may be wondering, how does this play into the forced recalls and the short squeeze we're going to see in AMC? It is very, very simple. Don't make it so overly complicated, right? The European Union doesn't want to take on all this debt that the banks are doing by putting liquidity out in the markets for these hedge funds and institutions that are going massively underwater on their positions, right? That money that you're making on AMC and all these other stocks is coming from somewhere. It is coming from a lot of these hedge funds and institutions, obviously, but on the back end of that, it is a lot of these banks. So this is the biggest red flag that you could ever get. And we do know from the Ortex data, the average days on loan is about 55 days. So we do know, as far as AMC is concerned, that a lot of these banks are going to take a hit for this when it is all said and done. And I think Archegos is going to be a tiny reminder of what is actually to come. I do think we're going to see losses for these banks in the multi-billion dollars, if not 10 to 20 to 30 billion dollar range when this squeeze actually does happen. But JP Morgan, all these other banks, they're not going to lose out on this liquidity, so they're going to force recall on all of these shorts in their short positions. They're going to take that money back. They're going to say, you have X amount of days to cover your short positions. We're not giving you any kind of money. Once we do see that gamma squeeze and that short squeeze start to happen, we're going to see it go in all out effect. This is the biggest red flag that you could ever receive, especially if you are on the bullish side of AMC. This is a very, very, very great update to get today, and I do think we have awesome things in store for AMC. This is probably only the beginning. We're going much higher, all the way to Tendy Town. Now, this is going to wrap up this video. If you guys have any further questions, maybe there's something you have a question on I did not clarify, make sure to leave that down below in the comment section. I will get back to you guys. I pretty much respond to every single comment. Make sure to hit the like button as well, comment down below, and subscribe to the channel. And if you want to stay up to date with the moves that we are making in the community, check out the link down below for the buy and sell alerts. It literally pays for itself, as well as get up to $70 in whatever free stock that you want using the link for public. I've been getting Tesla and Beyond Meat. They did get whacked today. They were down about 4% a piece, but it's all for the long term, and it is literally free money. I just got $30 of Beyond Meat today, so check it out. Literally free money. No need to even link a bank account or deposit any money. You get your stock immediately. With that being said, I will see you guys later. Take care.